Hey guys, thanks for tuning in to the Plan B CRNA podcast. Today, we have a little something different for you. My buddy Matthew Newton is interviewing a fellow CRNA by the name of Rommel Javier. Matthew and I are very much alike in that we can both talk quite a bit. So this conversation is actually going to be split into two parts. The second part is going to air next week. And the first one, well, it's coming up right now. So enjoy the show. Welcome to the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm so excited that you're here. The Plan B CRNA podcast is the only show made specifically for nurse anesthetists who are exploring options outside of their traditional career paths. This is the place to expand your mind and your goals as we uncover new ways to produce side income together. Join me for some honest, unscripted discussions with other CRNAs who are transforming their financial lives. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating CRNAs and other healthcare providers about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you, yes, you, to create passive income and generational wealth while also lowering your taxable income through investments in the apartment and alternative investment spaces. If you haven't hit subscribe yet, make sure you do that right now so that you don't miss an episode. Thanks so much for joining me today. And now, on with the show.
Welcome to a Provider Spotlight episode of the Plan B podcast. My guest today is a CRNA who hails all the way from Southern California. He's been a CRNA for the past 12 years. He wears many hats. He's married, he's Christian, a father of two wonderful children, full-time CRNA and entrepreneur. Aside from being a stellar CRNA, Rommel Javier currently owns and manages two short-term rentals all the way across the U.S. on the East Coast, and he also dabbles in the sneaker resale market. I have so many questions about reselling sneakers, but we'll get to that here in a little bit. I'm proud to introduce you guys to Rommel Javier. Welcome to the show.
Hey, how are you?
It's good to have you here. It's really great to have you on. So tell me a little bit about your sneaker resale. I'm very, very interested in this whole concept of reselling sneakers. Is this something that I can just kind of dust off my old camouflage Crocs and get a high price for?
Yeah, there's probably a community or there's probably a niche of people there, as long as it's not at least it's kind of wearable and you can clean it up and you still got the box. But as far as the sneaker stuff, back in the day, I used to just admire or envy these kids that had the best. I mean, Michael Jordan was probably the person everybody grew up emulating whenever we were watching, basketball and playing it in the backyard. And he'd always wear the best, his sneakers were, if you wore it, you're Michael Jordan. But unfortunately, my parents didn't have, or they didn't warrant they couldn't justify how much or paying that much for sneakers that I'm going to beat up. So as I got older, made some more money. And, obviously I'm living vicariously. It's like my midlife crisis. I told my wife, I'm throwing it back to my childhood. And that's, it was cheaper. It's cheaper than a car, a expensive car. So I told my wife I'd buy retro sneakers that I've always wanted back in the day. So that's how I, kind of started it back. And then when I tried to look for certain pairs of sneakers, they were, I'd look on eBay and I'd see them getting marked up to $100, $200, $300 more. Just because they're limited. They don't make them you don't mass produce them or whatnot. And you can get them only at the Nike stores or Foot Locker or whatever. And usually they're sold out, maybe because a lot of people knew that there was a market for them and they'd buy 3 or 4 pairs, different sizes, not even their own size.
Well, my ultimate goal, the only reason I know anything about sneaker resales is because one time I Googled is it 2011 Nike mags that Marty McFly wore?
Yeah.
I want to say at the time they were $1,500 for a pair of them, or more.
Yeah.
They were expensive, but I want to say they only made $1,000. That's the only reason I know anything about that.
Yeah. Nowadays, those Air Mags are $30,000. Some people will pay upward to $30,000. Yeah, there's some sneakers that they would pay thousands of dollars. I've personally owned some sneakers, and usually retail. I'll buy them retail. Usually you can get on with the advent of the apps, sneaker apps, Usually on like Nike, you can get on a draw, and it's literally like a draw. You just randomly put your name in there, and usually they'll randomly pick your name. And so some guys have like ghost accounts, and they'll have like 50 accounts, and they'll try, and then they'll hit. But sometimes I've gotten lucky a couple times, and there's a couple times I've been on sneaker groups where they'll post some raffles for some like sneakers, and I try, and then there's times that I've hit on them. So
very cool. So so just briefly, what's the biggest sale you've ever had, or what are you most proud of when it comes to sneaker resale?
The biggest sale I've had was I won these off-white like baby blue Jordan 1s. And they looked really cool. They were literally, they call it a shock drop. So I was like literally walking to my I think our well baby appointment for my firstborn, and I had my phone in my hand, and all of a sudden the notification came, and it said like this dropped. And so I got on the app. It was like a random time in the morning, and I got it. And I looked at them, I saw them, I'm like, man, these are cool, but they are way outrageous for me. Like there's no way I can wear them. But there's a market for them. So basically I posted it up on like one of the groups, and I sold them for like $2,500. I bought them for $190.
Very cool.
Yeah, and then like the proudest moment like for sneaker, it's not really necessarily reselling. It's more or less like I'm part of like these communities, and just trying to be they're like-minded, like we have the same hobbies. So every now and then I'll trade like sneakers, and so that was pretty cool because I can trade a sneaker for another sneaker that I didn't like. I traded the pair of sneakers for like and it might sound crazy, but this like hype like sweater that I wanted, but the sweater they cost like $600, but I traded in it for like $150 sneaker, and we kind of bartered like that. So it's kind of like a bartering system, but I like that.
Very cool. Yeah, I understand that. So in my spare time I hunt bourbon.
Oh.
I like to so what I'll do, yeah, I mean I like bourbon, don't get me wrong, but what I always do is I'll hunt the harder to find bottles, and then every year I donate them to a charity, and I'll do a big bourbon basket of like hard to find rare bourbons. And I'll put 500 to $1,000 or so into this basket of buying these bourbons, but it'll get 6, 7, 8 grand at auction, because if you can go find a Pappy and a Weller 12 and all these in the same place, people will pay good money for these things. So like the act of hunting the bourbon is a lot of fun to me.
Yeah, you're speaking my language. I love bourbon. I just me and I got a few buddies that are in that bourbon community, and they've linked me up so that I've gotten a couple of Wellers, the antique Wellers and Blantons. So and you're speaking my language. I like that too. I mean, I have like different other hobbies, but yeah, bourbon is one of those things that I love too.
So I think one of the most important questions anyone can ask, it's my City Slickers curly question, where what's that one thing? What's the most important thing in your life? What's the thing that drives you to do what you do? What's your main value?
It's family. Ever since like I've gotten like, COVID the last 2 years really kind of gotten me, more spiritual, more closer to family, and more valuing time more. And I knew time is a currency that we can't buy back. And so what I am trying to do now is just trying to buy more time. And so with any endeavor that I'm doing, I'm trying to like just work more efficiently without bartering more time. So that's basically what it is. I just want to spend as much time as I can with my loved ones.
It's interesting because I asked, I remember when we first were talking about the podcast, I asked you to send me a kind of like a bio about you. And most people, when you say send me a bio, they'll say, okay, well, I ran this company from this day, I generated this much profit, and this is here's my doctorate in the background, here's this and this, and they talk about all these like things that are, I mean, not to say ego, but they talk about all these like kind of superficial things. And one of the things you focused on in your bio with me was, I'm Christian, I have these values, I'm big on my family. I always think that's interesting, because I'm like, we have a very similar motivation. My whole thing, and those are my exact words, is I'm not making money and I'm not earning a salary. I'm buying time. The more money I make, the more successful I am, the more time I can buy and spend with my family, retire early, go on those vacations with my family. So I think that's like, not that there's a wrong motivation, but that's like the best in my book, because
Yeah.
right up my alley. So I guess kind of to segue onto that, what started you off on your real estate journey? Was there this aha moment that made you go, well, hey, I need another source of income, or I want a hobby, or maybe a separate retirement plan?
For sure. What basically was like, it was like one day, literally, I don't know why it kind of like came to a head, but my parents have had a rental for like the longest time. And from what I hear from like all the years that they've had that rental, they said, don't get a rental because, they've had nightmare tenants. And I do remember the nightmare tenants that they would just, they'd hunt them down for like, rent or whatever. We'd had to like, they've had to like redo the garage or like the place because one tenant kind of like thrashed it. But for the most part, they still have that rental now, and without that rental, they're living off Social Security, and it's paid off. It's an asset that's, worth probably 700, 800,000. So it's like a break the glass kind of deal if they needed it. And the aha moment was, when COVID hit, we were, being kind of not furloughed, but there was like a question there where it's like, well, if I get this, like, what's going to happen? Like the income stops. And then I remember having that book, Rich Dad, Poor Dad. And I've had that, like, I had it literally in my closet for like 10 years, but I just never thought about like reading it because, once you get, like you said, in the previous question, it's like, I was like climbing up the ladder of like how much money I'm making. And I thought, okay, well, if I'm making more money, I'm getting more money, I can work extra. That's what it's all about. But I never really thought about like, okay, well, what happens if I break my hand or my wrist or I, contract COVID, I don't, make it or whatnot. That was a real possibility at the time. And so that was the aha moment. Once I was like laying in bed and I told my wife, I'm going to start reading this book. I started reading the book and it was almost like eye-opening. Like, I really got to like think about money differently and my time and how to like, deploy this capital. Like money is basically just a vehicle of acquiring assets. So.
It's interesting that you talk about like how, you say the word asset, which is something that like, I read the same books. I have Rich Dad Poor Dad right behind me on the shelf, but people don't think about that. And they assume that, oh, you're a big shot CRNA with that big old fat paycheck. You're well off with money. You understand money. And the more doctors and CRNAs and even like just people that are doing really well, they don't understand money. They don't have these plans. If the world stopped again and they had to go 3 or 4 months without a paycheck, they would be up a creek. And that's a very scary thing because my aha moment was pretty much the same scenario where I was like, uh-oh, I just got furloughed. I don't have work for a couple months. What are we going to do? Well, thank God I have a big coffer in my bank account at the time, but that, I need to get into something. So I started looking into real estate as having assets that can really help you out. I think that's great.
Yeah, absolutely. And that's the one thing too. Like I always tell people, like, I have a 401k. If I had to break the glass, yeah, I'll take a penalty. But what's the point of the 401k if we don't reach 59 and a half or 60 or whatever that time is? Mm-hmm. And so, I've got a cushion in the 401k, but eventually I was like, well, I've got to like kind of diversify, And people were like, at the time they were trying to invest in stocks and they're telling me all this. It was all foreign language and it was an asset and it's not necessarily an asset. I don't see like stocks and day trading as an asset, but I just couldn't control it. I can't control that. I buy something and at the whim of like somebody saying something or tweeting something, I lose money. It's not like I can't value add it. I can't, raise the rates or whatever. It was an asset or, stocks is something I just don't understand. So
if there's one thing I am good at, it's losing money in the stock market.
Yeah, me too.
No matter how much I do and how much I've thought about it and read on it, and boy, I get my butt handed to me every time I try to invest. I let my people do it now. Unfortunately, with our economy, I'm still losing money, but it'll come back at some point. But like, I don't even bother. Short of buying Disney and Tesla, I don't buy anything myself.
Exactly. Yeah, I did that with crypto too. I was like, it was the run up. I'm like, great. And I pulled out my money. So I was working with the house money, and then all of a sudden it's going down. I'm like, what's causing this to go like really crash? And there was nothing I could like. Literally, I don't know how certain crypto coins work, and I'm like, why is it going down so much? And I'm losing all this money. I'm like, what part of like the economy or whatever? I'm trying to understand it. Nobody could explain it.
And the scary thing about crypto, which is unregulated, it shouldn't have any real effects by the real world. And for probably the last year and a half or so, crypto has been tracking really, really close to the stock market, which shouldn't happen. That makes me go kind of like, what's going on?
Right.
Like, yes, I do think there is a lot still in crypto, but like, I'm like, is it being influenced by things that probably it shouldn't be? And I'm
Right.
willing to guess yes.
Yeah, I'm pretty sure you're right. Absolutely, I agree.
So back to your rentals. So from what I understand, you have two short-term rentals, both in North Carolina, which is a stone's throw away for you. Tell me a little bit
Yeah.
what came first, how you got into the markets.
Yeah. So the first one I got is in Pinehurst. I didn't know anything about Pinehurst. I have no idea what that city was. Basically, it's all about networking. And so, after reading Rich Dad Poor Dad, I was going down the rabbit hole of like, okay, I'm gonna find a rental. When I went and saw like rentals or the prices in California, the run up was going up. The appreciation in California is insane. So the rentals just didn't pencil out. Like the numbers didn't work. And so then I looked at like Vegas, Arizona, got into realtors where I'm like, okay, well, I don't think they necessarily wanted like my best interest in mind. They just wanted to sell a house. So one of my friends, our friends, Ryan Smith, he is a CRNA in Laurinburg, and he was telling me like, hey, listen, he calls me up one day, and I think this is like just I don't know, it's like divine intervention. He says, hey, I want to if you want a job, I've got a job here. My buddy just quit. I mean, what do you mean quit? He's like, well, he's doing so well in real estate. He's got, he's still working his other CRNA job, but he's doing so well in real estate. He's gonna kind of cut back. And so I said, I don't need the job because I'm 3,000 miles away, but I'd like his number. Give me his number. I need to talk to him. And so I called him up. He told me what he was doing. He has like a realty brokerage company, whatever, and he just got everything in house. And he says, I said, where are you investing? He says, Airbnbs. I said, where? He goes, in Pinehurst. I go, I have no idea what that is, where that is, but tell me more. And so he gave me the lowdown. He gave me like the pitch, and he gave me like he sent me like the pro forma on like a couple of his properties there that he was like managing, and he owns a couple, but he manages a few more. And so I said, okay, let's go. Why don't you send me some properties that would be really a good Airbnb? And at that point, like I was thinking, oh, he's just gonna sell me a property. But whenever I sent him like properties, I'd look on the realtor.com, whatever. I'd send it to him. He's like, the price point's not good. I don't like it. This one doesn't have a potential for a game room. So I really like that in a realtor where he was saying no, more no's than yes. And then we finally found one that the price point was like 330, a single family home, but it had a basement. And so there was the potential there for a game room. He says this is it seems like it's going to be like a triple, not a home run, because just the location wise, it was like right in front of like an exit path through like a marketplace. So when people kind of exit, like at night, the lights kind of can glare into the windows. But he says, but you're not living in it. It's like an Airbnb, and people, I mean, if there's a marketplace there, people can just walk across the marketplace. So it's actually pretty good. And he told me that it was a golf destination. There's like a bunch of golf courses there. The US Open plays there every few years. Next year, the US Open's actually going to play there. The PGA actually moved, some of their headquarters, I think maybe all of their headquarters over there. Fort Bragg is about 30 to 45 minutes away. Fayetteville is 45 minutes away. So a lot of the school systems are great. So a lot of the times, he was telling me that a lot of military families will live there. And, obviously, whoever's in the military can go to Fort Bragg and kind of travel back and forth. So it wasn't that far. And a lot of people like, retiring there as well. So there's a multiple exit strategies there. So I like that risk mitigation. So then we pulled the trigger. He was, I didn't know anything about that place. So I don't know the events. I didn't know anything. It was basically sight unseen. It was like right there. I was going on a wing and a prayer, and it's worked out pretty well.
Well, it's funny you say sight unseen. You speak about having a good team, and to me, that's one of the most valuable things. I have my realtor in North Carolina. Her name is Vivian Wilborn. If anyone wants her information on the show, let me know and I'll send it to you. She's top notch. She did the same thing with me, where I got more no's than I got yeses. She wasn't
Yeah.
selling me a place. I told her, I'm a sure thing. I'll buy something. Just find me the right place and I'll keep buying. And I mean, when you have a good team that you trust, I haven't seen the last 2 or 3 places I bought from her. I've never even set foot in them, and they're great and they're all home runs.
Yeah.
I hand them over to my property manager. They let me know what's what, and I make the repairs or do what I have to do. And
Yeah.
it's been knock on wood, it's been relatively easy and gone
Yeah.
really well. So like I definitely feel that good scene, and it's nice that you talk about how it's right there where the PGA Tour is and all that, because you have a good draw for the area. My area, I have my draw where it's medical students and residents, and like so. I think when you pick a Airbnb, I think having a good market and reason for people to come to this area is really important. So what about your other? It's in Blue Ridge Mountains, from what I hear.
Yeah, in Maggie Valley, like, so then I went to, I went down the like, okay, so this is like, because it's property managed, the first one, it's more or less like a passive investment. So the depreciation there can offset the income that's coming off of that rental, but I can't necessarily offset like my active income. So, kind of went down more of a rabbit hole with like, hey, where's the tax savings here? Because people are talking about these tax savings. And so then I got into like, listening to like tax strategies or whatnot. And a lot of the buzz was like short-term rentals and the short-term rental, like kind of a loophole. And so, for the most part, if you can manage it yourself, you can like, you can take the depreciation, do like a cost seg study on a short-term rental, and you don't have to buy commercial real estate. And you can like, offset your active income. And so then I went down to, okay, well, what are the better markets? A lot of people were just talking about Pigeon Forge and Gatlinburg, Smoky Mountains. By the time I was kind of like looking there, this is like late last year, like 2022. I'm priced out. Like the cabins there are so much. They're like 800, $1 million, they're ridiculous. I was looking into the Blue Ridge Mountains earlier last year, but I always got priced out like 50, 100,000 over asking. And I was like, I wasn't willing to go over that. And so, one of these, podcasts and, one of the bigger podcasts, they, I like North Carolina. I'm kind of like, no, I'm like all in North Carolina. I just like the migration pattern, the job market. I like the job growth or whatnot. So then somebody was saying like, Western North Carolina is actually kind of like growing, people like going there, and you don't have to have these extravagant like cabins or whatnot. And the price point was pretty good. And so I followed this realtor, Tyler Kuhn, and he's a big short-term rental like realtor. So I think it's real key whenever you're getting a short-term rental to find a realtor that actually knows about short-term rentals. And so he'd post like properties online, and usually and for the most part, they're all short-term rentals. And one day, I was kind of losing faith, it was like in October. I'm like, I don't think I'm going to find anything for this. And this is last year for that 100% bonus depreciation. But anyway, a cabin popped up. It's Maggie Valley. I gave him a call. I said, I really like this. It's a nice A-frame cabin. The price point was like 485. It came out of contract. It fell out of contract at no fault for the seller. I think the buyers were just kind of scared because they told my realtor, hey, listen, the interest rates are running up. The recession's kind of coming. I don't know what they did for a living. So they're like, well, instead of like losing a massive amount on the down payment, they just rather lose the earnest money, which was like $5,000. And that's a big chunk of money for me, at least. So I figured, okay, well, he told me about Maggie Valley, kind of told me like the drawing factors. I kind of mapped it out. I mapped out how far it was from Asheville. It's only 30 to 45 minutes away from Asheville, the biggest, it's like an up and coming like city where there's a lot of breweries, foodies, kind of hipstery, kind of Austin-ish. So a lot of people can go there to the Smoky Mountains, about an hour, maybe hour and a half. But on the western side of the Smoky Mountains, you get the leaf changes and like there's a lot more, like there's a lot of waterfalls, hiking, and it's more or less like, it's not like the draw there is more or less how people want to just relax versus like in Pigeon Forge, Gatlinburg, it's, you got Dollywood, you got all these like places where it's just,
you do a lot in those places.
yeah, it's like fireworks and all that. And, So I figured like, I prayed about it. I thought about, thought about it literally, it took me a few days and probably a week, and it just kept coming up in my mind. And I don't know what came about, but through prayer, I was just something told me like, just take a shot. It's not a big risk. I mean, it's like, the price point was 485. The interest rates at the time, I was like, okay, well, kind of like, penciling in like a 6% interest rate, but for the most part, it was kind of around 7.5, 7.2. It was a big jump from my first short-term rental was like a 3% interest rate on a vacation home.
What did you end up getting interest rate wise for?
7.6.
7.6.
But I had to pay no point. I paid no points.
And I'll tell you too, like watching these interest rates go up has been just so influential in like the properties I'm looking at, because going from even 6 to 6.5 is a huge difference on your mortgage. Same for 6 to 7. I mean, like it's going to get harder and harder as these interest rates keep going up. And I think we can talk about it later, but I think that they're going to continue to rise, and it'll be a interesting investment in the market. Yeah. So for a nice shameless plug here, what's the name of your Maggie Valley property?
Oh, the Maggie Valley property is called Beyond the Trees. It's called Beyond the Trees. I have an Instagram. It's called Beyond the Trees. Beyond _ trees BNB. But yeah, it's my wife is the one that kind of named it. Actually, the reason why we got this Maggie Valley property was it really was a short-term rental that was existing. So it's not something that I was like, okay, well, is it going to perform well? Whatever. It was already existing. It had a spa. It had like the furnishings. So I'm like, okay, I did the Data Rabu, and I was like, okay, well, it's making like $6,000 like last November, December, but the rates were going up so high. My like analysis was like, okay, at a 5 or 6%. But then I got to the point where it's like, okay, well, either you're gonna jump in or jump out. Like you're gonna take action. And a lot of the books that I've been reading is like, just take action. Like you're gonna fail, at some point in your life, and you just got to learn from it. And or you're gonna just have to like figure out how to like pivot or survive. And so I figured, okay, well, one thing is like, well, if the rates are this, if it goes down, I can refinance. If the rates go up, then I'm looking like a genius because I got when I got. And I think in North Carolina, I've talked to a few investors in North Carolina from California, and that's one reason why I went to North Carolina, is that the volatility and the fluctuations in home prices aren't as bad as they are in California in North Carolina. So that's why I felt like, okay, why not?
So how much did you put down on it? Was it what percent?
10%. 10% vacation home. Yeah.
Okay. And then I know you've only had it for a handful of months, but do you have any projections for the year?
Not for the year, especially from talking to like Tyler and like the other cabins. It's saying like projections for the year is probably about 65 to like $80,000 a year, and that's basically being conservative, and that's basically being like, okay, well, just managed. And so when I looked at like Price Labs and all of their software and seeing the projections, the average was real low, but there was a lot of them that were mismanaged. I saw them like they're either managed by like a third-party company, those bigger ones. I'm not going to name names, but those bigger property management companies, and they don't really manage them that well. And a lot of them are not dynamically priced, so they just kind of put the price there, and it's like there. And so I kind of projected myself like, well, if I'm going to be the best operator, best host of this, let me compare myself to the top like 20, 25, 30 properties. And for the most part, most of them were like performing in like the $50,000, $60,000, $70,000 range. And I looked at like their photos, almost like the enemy method, like Avery Collar was talking, like, just looking at like what they offer. I felt like, if I put a game room, I put an arcade, maybe like update the furnishings, maybe not make it not so, like everybody else. I'll have a cabin feel. We kind of updated and modernized the inside with modern furniture. Then maybe we can just, we can project it to make that much. I mean, that's, for me personally, that's being like optimistic, because just in case I'm like also seeing like a lot of doom and gloom because of the recession. So, Like to make like, if we can
being, you have your conservative, outlooks, which is the smartest thing to do. Because I cannot tell you how many new investors I've talked to. Well, it only made 50,000 last year, but I'm going to make 100 this year. And I look at it the exact opposite way. My cabin made a little over 90 last year with the previous owners, and I'm like, I'm shooting for 50 to 70, and I'm going to consider that a success because
that's perfect.
I'm a brand new owner. I have no idea what I'm doing. I'm figuring it out as I go, and I've definitely had a lot of good lessons. So I'm like, you know what, a 20% loss for the year as I get my following, as I get my status on Airbnb and VRBO, which a lot of people don't know about, that you need superhost status and all these things. I'm going to have an idiot-proof way of doing it. I'd rather shoot my numbers low and be surprised if I get 90.
Right. Yeah. If I can hit like the 50,000 to 55, 60,000, I think it's a win. It's a win for me just because of the economic climate. Like a lot of people are just, the competition in like Maggie Valley is not a lot because they can't build more. And that's the one thing that Tyler was saying. And it's true. Like we have our cabin is perched here. If you see like this drone shot, there's nobody else like within, like maybe there's my neighbors, like maybe like a quarter mile away. And then it's just a vast land. Whereas they're building trap cabins up in Gatlinburg and, they're building more.
That's nice. I like the peaceful, secluded, that's really nice. And, and I've seen your pictures and stuff online. I mean, your cabin's absolutely gorgeous. So for any of you listeners looking for a good place in Maggie Valley, I highly recommend it.
I just love it when you get like minds talking shop. Both Matthew and Rommel have ventured into the world of Airbnb, and they're both rooting for each other along the way. Plus, they're genuinely curious about all the different ways to find success in life. The CRNA community is such a special one in that way because we all want to see each other succeed. Plus, you can really go far with others by your side. That's going to do it for today's show. If you enjoyed what you heard, make sure you give us a 5-star review and a rating to help us out. We can only grow the show with your help, so make sure you share this with family members, friends, and coworkers. And if you'd like to learn more about Rommel and his ventures in Airbnb and his sneaker resale hobby, make sure you check out the show notes for his contact information. Thanks for listening, and as always, stay safe and take care of each other out there. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On-Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On-Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.